A lot of people have it backwards. A lot of people think that investing is all about making money. But it's not just about making money, it's about making money compared to the risk that we enter. So it's about risk-adjusted returns. Now I believe that Solana is currently in a spot where the risk-adjusted returns might be above the average market outcome. Now, I used to be very pessimistic about Solana a few weeks back, and that pessimism actually made me a lot of money. Now, I want to talk about a concept a lot of people are not aware of. I want to talk about relative valuation bets. So in the end, we don't care about the US dollar valuation of an asset. We just look at relative performances. We can make money with that relative performance. Now, here's a chart that made me a lot of money in Solana already. This is Solana relative to Ethereum. So how does SOL perform relative to ETH? And I entered a short position over here. I bet on falling prices. I announced this on April 13th. So this is the same chart, right? The same kind of lines. I bet on falling prices over here. And then in the end, we saw exactly that price action. With a little bit of decentralized finance magic, we can just bet on this relative valuation. We don't care about US dollar prices. Now, how much money can we make from this actually? Because this doesn't look like anything significant. It of course depends on how much money you can employ. So I closed the position on the 20th of May and it turned 43K into almost 60K. And again, the real thing that mattered here is just that Solana did worse than Ethereum. But now the situation is different, right? We are at the lower end of the trading range. And yes, there is a chance that Solana could outperform Ethereum by 40%. And I do think this is a potentially good bet, but there's an even better bet, but more on this in a second. There are many more advanced ways to look at crypto prices. So instead of just looking at the US dollar chart, we can look at relative valuations like with Solana to Ethereum, but we can also look at dominance charts. So how much of the entire cryptocurrency market cap is currently in a certain asset. And that's what we see over here. This is the Solana dominance, and it tends to now trade in a range in the last few months. That range is between 2.2 and 3.6%. We are currently rather on the lower end of that range with the tendency to go up again. So Solana could outperform the rest of the market again by 40%. There seems to be a shift happening in the Solana ecosystem. So Solana grew a lot because of the pump.fun ecosystem, right? The meme coin trading. And while the number of transactions of pump.fun isn't growing anymore, we seem to be at a somewhat stable level now. But clearly the non-pump.fun related transactions tend to now grow. Here is all the decentralized finance capital across all blockchains over time. So this is not just Solana, this is all the blockchains, and we can clearly see the DeFi summer in 2021, then the subsequent winter where FTX and Terra Luna collapsed, and then the recovery. But that recovery did not bring us to a new all-time high. That's for all the chains. It's different for Solana. For Solana, we did see a new all-time high. Now there's a lot of volatility in this chart. And parts of that volatility is just the Solana price itself going up and down. But when we remove that volatility, when we look at the total value locked on the Solana chain measured in SOL, we see quite constant growth. So really the blockchain is getting used more and more, despite pump.fun not expanding anymore. So it's the rest of the Solana ecosystem that's now growing. Just have a look at the trading volume on decentralized exchanges. Again, measured in Solana, it tends to be quite high. Or have a look at the number of returning users. Again, there's continued growth. Or check this out. This is the stable coins over time. Again, there tends to be rather inflows than outflows. So long term, the fundamentals look okay, but I think there's actually more return to be made than just those 40% that Solana could outperform Ethereum or the market as a whole. And that opportunity is hidden over here. Have a look at the top used protocols on the Solana chain. What grew the most in the last month is the Radium decentralized exchange. Here is its total value locked over time. It also hit a new all-time high. And here is the Radium price relative to Solana. Now, again, we're looking at relative valuations, right? In the end, why do we get into Solana over Bitcoin, for example? Because we want to get more performance than just investing into Bitcoin. Solana is more risky than Bitcoin. Same is true for Radium. Why would we get into Radium over Solana? It's because Radium is more risky than Solana. And so we want to remove the general macro from those kind of charts, right? When Bitcoin is going up, Solana is going up, Radium is going up. When Bitcoin is going down, everything is going down as well. If we look at relative valuations, we can actually see what's happening directly with a certain token. Now, what happened here at the beginning where Radium underperformed Solana by 94%? 50%? The answer is tokenomics. The circulating supply of radium expanded massively, but that expansion has now stopped in the last months. And because there is no new radium hitting the market, we can finally see the price outperforming Solana. But again, there is some volatility, but one more time, the potential risk to potential reward is quite massive. Now let's work with the assumption that radium outperforms 150% versus Solana. Let's also work with the assumption that Solana outperforms the rest of the market by 40%. That means relative to Bitcoin, radium has a chance of outperforming by 3.5x. If Bitcoin doesn't move at all, there's the potential for radium to hit more than $8. We could hit a new high and supersede the prices of the end of January of this year. And so this is where I think the real opportunity now lies. It's not necessarily in just buying Solana. It's not in buying Solana over Ethereum. It's in buying radium, because radium is growing that quickly. It's still comparatively cheap and it's got a lot of upside potential, while the tokenomics are now way better than they used to be. Now, to a degree, the crypto market is just a reflection of unregulated life. As in, most gains come just to a few people, to a few assets. The vast majority tends to lose. So if you're just taking a broadly diversified portfolio of assets, we're likely going to not perform that well. Because here's the thing, crypto does not have any regulation. Everybody can launch a coin, and so there's no real barrier to entrance. And because of that, we tend to see a lot of fraud. We tend to see a lot of setups where tokenomics are rather poor, so where the average investor tends to not make money. And so when crypto cannot create money out of thin air, when it's actually a sophisticated system of moving money from the not so well informed to the better informed, then how can we become better informed over time? Because surely there's also a luck component involved, but there are some people that tend to win long term. Now, it's obviously not easy to become part of the minority. If we are not launching a project and we know more than the rest about that project, then how can we still become insiders? I think the best answer is to try to figure out what the insiders are doing and then simply copy trade them. For example, over here, we've got the Martini guy, and he bought the Chippy token when the market cap was still at $455,000. Now have a look at the comments on that wallet signal. The Martini guy tweeted about Chippy 2 hours after he has bought himself. And so since we are in a market without much regulation, and since we are in a market that does not produce any wealth, it's just transfer from one to another, it's all about figuring out an unfair advantage. And the unfair advantage of Martini guy is to simply have a following, right? He's just buying and then he tweets about it, and then the price goes up by more than 50% in just a few hours. Here's, by the way, his YouTube channel. He's got 150,000 subscribers. And so when we know what the insiders are doing, when we know what the influencers are doing, we can replicate those trades. Now, the art is in finding the right wallets. And we are tracking 12 wallets of Martini guy. In total, we are tracking more than 500 wallets. So 12 are by Martini guy, but we've got a lot of other influencers as well. For example, check out this signal over here. This is YouTuber Jesse Eckel. He bought $10,000 worth of the winner token on the 2nd of May. And surprise, surprise, on the 6th of May, he published a video about the winner token. And so, of course, the price also appreciates in the top by almost 50%. And so really, it's a game of attention. It's not a game of fundamental analysis. Most YouTubers, they simply just buy the asset and then they promote it on their channel. And then later on, they might sell it at a higher price. Don't get distracted by all the noise. We're also following Alex Becker, for example. So we've got 12 of his wallets. We are tracking Crypto Banter. We've got 33 of their wallets. And here we've got Brian Young, who, by the way, bought the virtual token extremely early. And we've got 5 of his wallets. So how do we get all of that data? How do we know what influencer holds what kind of wallet? And how can we then create those signals that we can actually buy and sell with them? The answer is through on-chain analytics. So there are several approaches. We can, for example, look at what kind of NFTs does somebody hold. We can then see, are there maybe potentially deposit addresses on centralized exchanges? Did other major deposits happen to the same kind of wallet? Are those wallets potentially connected? We can also look at prior purchase histories. So let's say we've got an influencer that talked about very small altcoins in their Twitter or in their YouTube. Then we look at wallets that held all of those altcoins and that potentially bought them also before the tweet or before the YouTube video, then we've probably also got the right wallet. We can then afterwards confirm this, right? We can look at what is the wallet buying next. Is there again another tweet or another YouTube video on this? If the answer is yes, it's probably the right thing. We're then continuing to track it. And so I've made an entire video playlist on how to find different wallets and how to track them, how to then get the signals and how to interpret the signals. And so our entire community is trying to find new wallets, discussing this in the wallet research channel. And then once we found an agreement, we add this to our influencer trade tracking channel. And so the idea is pretty straightforward. We're trying to generate as much outperformance as possible that in the end, the membership more than pays for itself. Now there is some funds needed, right? We can't just trade with a few $100. I think the best portfolio has at least $5,000. Once you are at 5,000, you should be able to make that money back. Now, if your portfolio is larger, then you can consider to potentially sign up for yearly as well. First of all, there's a discount involved. So there's $250 off. But secondly, there's also a 1 hour free Zoom call. So in case you've got a larger portfolio in crypto, but also outside of crypto with other asset classes, and you could benefit from a direct one-on-one call, the yearly membership might be for you. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.